Boom, boom. How's it going? Good evening, and welcome to M5 Property Addicts. And tonight we are going to be talking anything and everything around real estate, but with a big focus of private money. So my name is TJ Taurai Jack. If you've never been here before, and I'm trusting that if you are plugged on in here, you like to talk things around private money. You like to talk about things of real estate. So welcome, and out there in the comments, you can just let me know where you're watching me today before I jump into it. I'm going to talk to a couple of things here. I'm going to talk about 5 things that I want to speak to today. Mistakes that one can easily make. I made those mistakes myself, and we're going to talk about that for the next 35 to 45 minutes. And as I go along, I'd also want it to be a little bit engaging to you. So you can actually jump on into the comments and ask me the questions as I go along. So I want to put a disclaimer out there. By the end of the session, I am going to sell something through to you. And that is, I would like you to buy the course that we've put together, which is called Finding and Raising Private Money. And that course is going to be available on the 6th of March, so which is around about 10 days away from now or so. It's going to be on a Saturday, so the whole day you get to spend with me together with my team and online and the virtual class for 2,000 Rand. You get to have the knowledge of how you can find private money, how you can raise it, how you can identify it, and how you're able actually to just listen to it when it's talking down the street, and above all, how can you close it? But when you start to closing it, right, how do you keep it actually legally? How do you do it? Today, I was out actually doing a broadcast and shooting a video. As you know, that on this channel here, every second Sunday, we do what is called My Best Property. And I was out with one of my boys who started off around about 6 years ago doing developments. And on his first deal that he got around about 9 investors coming in to invest with him. And this is 6 years ago. And all of those 9 investors he got introduced on that particular deal. Up until now, he sold that property outright now within the last 2 years. And all of those investors are still with him. And he mentioned to me, I asked him a question and I said to him, dude, of your 9 investors, how many of them have been investing continuously in all of your projects? And he says to me, TJ, all of them are still investing with me. However, in particular, there is one that has. I put a deal on the table and boom, he puts money. So it's almost like a no brainer now. All the time, this investor is investing alongside him. But then the question is, why does he actually invest alongside him? So I meet up a lot of people that tell me, TJ, we want to do this thing, but we don't have money. And I'm always saying to people, you don't need money. What you need is a good deal. And over and above that, you need to connect that deal with the right investors. And that's what I call funders. And a lot of people, actually, last night I had a coaching session. So as you know, I'm a coach, I'm a mentor, I do mentorships. Cheers. Mm. Something that was sticking in my mouth. Some sugar. Nah, not some sugar. Some vodka. A little bit of something was stuck in my mouth. Right, so there you are. Mm, Yesterday, last night, I was actually having a conversation around about 5ish, and I was speaking to someone who said to me, TJ, what I'd like to do actually is I've got opportunities, and in particular in the Eastern Cape. This person has found a very good deal, and they don't know what to do because they don't have money. And I literally mentored them for around about 15 minutes to give them nuggets on how to do it. And I thought that was pretty amazing because they sent me an email today and they said to me, TJ, I've actually started taking action on some of the nuggets that you have given me. And I'm seeing fruit. One of my friends is actually going to join venture with me on this. So the question that I've got for you is that if you've got an opportunity either to be mentored with me, why wouldn't you want to do that so that I can just nudge you into the right direction? Because I had a mentor myself, right? And I still have a mentor up to now. And out of that, you can be successful in your journey, right? But I am as human as anyone else. I've had mistakes, and tonight it is about talking about my mistakes that I have made in the journey of finding number one, investors. Number two, to find people that are called that have private money. So let's maybe define what is private money. So private money, it's all around us. So there's lots of people that have money in their bank account. There's lots of people that have money that is sitting underneath their mattresses. There's lots of people that have inherited money. They don't know what to do with their money. There's lots of people out there who run other businesses, okay, and they want to jump into property, but they don't have the know-how. So I'm speaking to you and I'm saying, well, maybe you know how to look for opportunities and you've got plenty of opportunities on the table right now, but you don't know how to get private money. All of these people that I've just spoken about, they are waiting for you in terms of, just trying to get the right deals. So I'm going to park here a little bit and I'm going to say to the guys that are watching at the moment, and I'm just going to give some shout outs to those people. Killian Naidu says, what's going on, TJ? He's watching from Johannesburg. Abdul, he says he's watching from Debs. And there is someone called Da. I'm not so sure what they are watching from. And here is Sibu Siso. Hey, Sibu Siso, how's it going? They are watching from Kronstadt. And I've got someone here, Eliana. She says she's watching from Cape Town. I'm just scrolling here, and then someone else says, "TJ, how's it going? Some good information, man. I'm coming. I'm watching you from Joburg." Someone else here, I think it's Teresa. They're saying, "How's it, TJ? Some good info, please." TJ, tell me, how do you actually close a deal and get the investor on board? That's a question there that someone else has just asked me. Great. So you got a question around investors. You got a question about private money. I need you to just jump in there. But let me actually start off. So I've put in some notes in here for me to be able to actually to go through systematically all of my 5 mistakes. And if you have to take in any of this, right, I am sure by the end of this, you're going to be saying, TJ, I can do this on my own. But I want to tell you, this is not for everyone, right? It is for a couple of people who actually want to grow their business. This is what it is in the real estate space and utilizing money that's out there so that you can start to grow your business. Do you need to have a credit profile? No. Do you need to be South African? No. Do you need to be sitting in South Africa? Yes. Do you need to be able to speak to people? Yes. Do you need to be able to wow them and be walking like you're walking on water? No, you don't. So let me tell you, back in the days when I started off, I wasn't good at talking to people. I'm actually an introvert. But I think I balance things out when I'm out there and when I'm at work. I'm at work right now, okay? And I want to stress the fact that, some people say to me, TJ, I'm an introvert, so I can't do that. Being introvert doesn't put food on the table, okay? But it's fine. You can stay to be an introvert. It's okay. And you can continue doing what you're doing, being a cashier at the bank or, being an analyst at the bank or working as a technician at telco. You can continue doing that. But you can learn certain skills as you go along so that you don't have to stay where you are. And I'm not saying here that, definitely if you start doing what I'm doing here, then you have to leave your job. So there's so many people out there that are doing exactly what I'm doing, but they haven't left their jobs. They are still continuing on. Okay. So let's start off. My 5 mistakes. I'm going to cover 5 mistakes within the next 30 to 45 minutes. That's what I've committed myself to tonight. But at the end of it, I would like you guys to jump in and get into a course that I'm going to be hosting on the 6th of March. And that course will give you literally everything that you need to do to manage private money, to manage investors, to find them and things like that. Right. So number one, let's get into it. Right. Number one, drum roll. So my number one is that I wrote it down here. I got some notes that I've put in here. Number one is that I didn't start sooner because I didn't know what I didn't know. Okay. So that was my first mistake. I didn't know, I didn't start sooner because I didn't know what I didn't know. So here's the thing, right? Potentially you are sitting here and you're like, so what is this all private money all about? And you're thinking, oh, well, you know, that was TJ's first mistake. Yes, in hindsight, it was my mistake because I didn't know the information that I know today. And for that reason, I wasn't able actually to close some deals with private money, with investors. I wasn't able to do that. I didn't know that they're there, right? But here's the thing, I used to work at the bank at the time. And at the bank, there's so many people that come in and give the money to the bank. These people, they can be called clients and things like that. So the bank is designed to accept deposits. And the bank, what do? In turn, they then invest that money into different things. So am I saying that you need to take the job of the bank here to take in deposits? No, that's not what I'm saying. I am saying that when I didn't know what I didn't know, with the same analogy of having the bank collecting money, I started looking out at opportunities and I'm like, who amongst my friends actually has money that we can go into a deal? I then looked at myself and I said, hold on. There was a time when a good friend of mine actually approached me for a business and we went into the business together. And if you have read my book that is called From Bad Day to Property Mogul, I speak of a business that I did very well on, which was called car rental. And basically what I did here is that I started that business with a mate of mine and we put money together and we was able to start that business. But he jumped off a little bit early when he made a little bit of money and I continued to make it a big business of around about 50 cars that I had at the peak of that business. And all of those cars, right, just like what we have Uber today, I would hire, go and buy those cars and I will hire them out and I would get rent from it, right? So I made good money out of that. But when I now connected what I didn't know, which was the information that I can actually go and check out with a mate of mine, I can actually go out with an uncle of mine, and together we can put our resources together, which is not something that is far fetched. A lot of people already do that. A lot of people do this in Stockville, a lot of people do this in families, but I didn't come from a family that was designed like that. So people in my family, they don't put resources together for to do big things and cool things. They don't. So I grew up without knowing that. So I didn't know what I didn't know. And because I didn't know what I didn't know, I didn't start anytime sooner. Now imagine had I started off 10 years ago. I started off about 5 years ago, this thing, right? So imagine had I started 10 years ago, where would I have been? But because of lack of information, I didn't start sooner. That was my first big mistake. And potentially you are in that boat because you haven't started and because you don't have the right information. So you don't know what you don't know. You get stuck where you are. You know what I mean? What you know today got you to where you are right now. Yeah. But what you now need to know will get you to the next level. And that's what we're talking about. So obviously, if you don't know what you don't know, your next level is getting the right information, which is coming to the class on Saturday, and then boom, it gets you onto the next step. Is it the best step that you need to be at? Is this the holy grail of the steps that you need to be taking? No, it will be one of many steps that you're going to be taking that will lead you to your success. That was my mistake number one. I'm going to jump. I'm hoping that you're taking notes as we're going along. But if you want me to wait a little bit so that you can go and take a pen and paper, do that. Actually, you know what? I'm not going to wait for you. Just put on some more volume there, and then you can go and get a pen. Maybe one of you want to go and make a wee, but we're not going to wait for you. Your wee is going to make you lose some good data in here. But let's continue on mistake number 2. Right. So mistake number 2. Right. So my mistake number 2. Remember, I said I had to write this down. Yeah. So my mistake number 1. I didn't start sooner because I didn't know what I didn't know. But then I got the information. I went to class, right? And I got the information and I started learning, I started exploring, I started being on YouTube like this one. I started listening to other great people that are doing great things, but I was scared. I was scared, right? I was dead scared. So here's the thing. If you have only managed your own money for the rest of your life or the time duration that you have been employed, right? And you are managing your own money. And maybe you have borrowed your bra some money, you've borrowed your sister some money, or whatever the case is, and they haven't been able to return it back. And there you are, you're thinking, if I have some investors, what if things go wrong? Yeah, things go wrong. Yeah, they do. So I got scared. I started getting cold feet. And even what they speak about, which is they normally talk about other people's money, and basically a lot of people think it is money from the bank, right? What can go wrong with other people's money from the bank? Let's say you got a credit card. What can go wrong? Well, the creditors are going to call you, and from there, what's going to happen? The next thing is that they're going to blacklist you, right? And maybe you might have some socks and shoes, and they'll come and collect those from you. That's the worst that can happen. But is it the same when you are managing or when you're working with investors? What can go wrong? So I started thinking about all of those things and I started getting scared. So fear got a hold of me. So for about a year, I wasn't able actually to ask for investors to say, this is what we want to do. And I had good deals for 6 months. I had good deals. And all of these good deals were falling off. But around me, there was lots of people that actually had money. And out of this, something in me then started saying, maybe it might work. But there was one seminar where I attended, and this guy here was talking about how he has found a way to make sure that he mitigates the risk of things going wrong on his deals, and he puts it into his documents with his investors, the funders, the guys that are giving him private money. And it made me think, and I started thinking like, so how can I also do it? And at that time, I started hanging out with people like Bruno Samao, with people like Salma Stein, she's an attorney. And at the moment, I am in partnership with a lady called Elise Leroux. Why am I in partnership with her? Because she puts in all of my legal contracts together in terms of when I've got private money on the table, what kind of a contract are we going through into? So I'm removing the risk. That's number one from a legal perspective. So if any one of my investors is coming in to invest with me, it is pretty clear what is the risk that they're getting into and what are they likely going to get out of it. So they can weigh out the risk and the reward. That's number one. And then number two, because I was scared, I didn't really understand how to mitigate various risks. So what do I mean by that? If you're scared that something is going to go wrong, it basically means that you are not so sure either if you're doing a development, you're not so sure of your building team. You are not so sure of your architect that they can be able to deliver. You're not so sure of your project manager that they are going to deliver. But if you now have a strong team and people that you trust, people that have done this, right? And they have been able to do renovations and all of these things. Remember, this is private money for your deals, right? For your property deals. So if you don't have all of this in place, yes, you're going to be scared because you are in doubt. However, if you've got like a super strong team, like I have now built over a period of time, then out of that, you have confidence that you can be able to deliver. So when a project is giving me around about a 30% return, I am comfortable that I can give my investor, my private monies, people, my funders, I can give them a 20%. I can give them a 15%. So what am I doing there? I am putting in the what if scenario of something going wrong, and I'm saying I've got a very good cushion. I'm going to make a little bit for my own, and I'm going to be able to give my investor very good cash. So what am I trying to say here? If you are scared, there is something that you're not so sure or you are in doubt of within your processes of managing that money. So we spoke about the legalities around it. We spoke about your team of delivering the project. So if you don't have that, it basically means that you get scared. But if you do have all of that in place, right, then there's nothing to get scared because you've mitigated all the risks up front. You have no issue. You're going into a deal and it's a sure deal, right? And you can be able now to bank some money from your investors or from your funders and your private money people that you might have. Who could this be? It could be your auntie, it could be your mom, it could be anyone, right? It could be anyone at all. But that's kind of like your circle number one. So people that have come that are joining me in the course on the 6th, great. So I will speak a lot about different types of circles that you need to tap into. And for each level of circle that you're tapping into, it defines a different level of you. Okay. So your first circle, this is your friends and family members, they already know you. Chances are they're not even going to give you some money. But your second layer of circle, that's another layer that we'll be speaking to in the course. So that is my mistake of number 2. So I was scared. It is a mistake. Why do I say it's a mistake? It's because I could have long mitigated it. If you know the right information and you have the right team members, you don't get scared. Actually, you get muscle power. Like I'm sorry that it's not all there. I'm gonna start jogging and gymming a little bit, but that muscle power that I'm talking about, that's what you start getting into a deal. You're like, yeah, I'm gonna get it. Where is the deal? Let me jump into it, because you got the Vuma in you. You know nothing is going to go wrong. Okay, so you can get all the investors on, and you're like, yeah, bring it on. I can deliver because you got the right muscle to do it. Okay. Point number 3, or mistake number 3. So there I am, right? I've got all these deals that are available now. I've got the information. The fear is gone. Then I started, but I only started with one investor. Yeah, that's a very big mistake. Having one funder is the biggest mistake ever. If you're serious about your property investment, you can't have one funder. You can't. It's just practically impossible. Ah, this vodka with whatever that's inside here is tasting nice. Cheers. Right, let's go on. So, what am I basically saying here? If you have one funder, when you're starting off, it is good and it is bad. Right. What do I mean by that? I'm going to give you 2 examples. When I was starting off, the one I had one funder who had promised me to give me some good money. TJ, when you've got a deal, I'm available. My private money is available. Where he was getting the money from, I don't know. At that time, I didn't care. These days, I care. I want to know where is that money coming from. What's your source of this income? Because you need to know that. You don't want to be money laundering with the money, right? Now, at this point here, I'm starting off, I'm fresh in the game. So guess what happens? On my first deal, I've got this one funder, gives me some private money, and they give me around about 200,000. But guess what happened? In 2 weeks' time, I got another deal. And I went back to my funder and I said, look, Mr. Funder, I've got another deal here. And they said to me, well, TJ, I think let's slow things a little bit because we haven't finished this one. And I'm like, it's a better deal than the one that we're doing right now. So if we don't take it, we're going to lose it. And he says, no. We just need to make sure that, we are creating a good relationship here so that, we can then be able to do good deals. Was that a bad thing? No, it wasn't. But what about this deal here that I now have? What happens to it? Do I lose it now? So what I did is that I then realized that, oh no, I am just actually with one person here. I have one funder. If I've got another funder, I could potentially be now rolling on two deals at the same time. Do I have the capacity to do that? Dead yes, I have the capacity to do it. So if I have two funders, can I manage both of them simultaneously and work on different projects simultaneously? Because I can get a contractor here, I can get another contractor here, I can get another tiler there, another tiler there, or potentially I could have the same project manager managing the two projects. So that was my mistake of getting, one funder for a short period of time. And I'm going to jump onto your questions after I finished off point number 3 to answer some of your questions that you might have. So just drop them down as we go along. So here's the thing. So I am in there now. I've got this one funder. So which means that I am at a slow pace in terms of delivering my project. But what if it was a big project? So at one point, I actually got access to a big funder, right? And they were opening up around about 10 million rand to us. Now, in that case, it's a different case. So they were creating some kind of an credit facility for us. That's what they were going to do for us. And Rita and I, we went out to see them and we started, whining and dining together just to make sure that, we are familiar with them. And we realized that we were not compatible, right? Which is another bonus mistake also. Sometimes you go into a deal with some other people, with some private funders, and you're not compatible. What it basically means is that that deal is not going to work, because remember, if you don't have relationships and if you're not compatible, things don't work out. That was just some bonus mistakes there that I've just given you. So let's come back again. The one funder scenario. It can be good, it can be bad. But for me, it was bad when I was starting off because my funder was limited. He had a limited amount of money at that particular time. Or he had a limited mentality of, let's do one deal at a time. And I was saying, let's go, right? But when I started getting these big funders now, I also realized that the bigger they come with the bigger money, the more complex in terms of nurturing relationships, in terms of legalities that you need to be doing. And you now need to be extremely careful because you can lose everything. I write about this chapter in my book, actually in my book that I wrote From Birthday to Property Mogul. And that chapter is called actually We Almost Lost Everything. Because in that chapter, or should I say in that scenario, when Rita and I was out there, we actually realized that these guys were not really out to fund us, but they were actually out to, they call themselves venture capitalists. But in their venture capitalists, they throw in a hook. So they give you some money upfront. And if you're not so careful, you're like, yay, we got some money. And then you start working. But if you underperform according to what you've agreed in your contract, they literally take off everything. So they don't give you access to supporting you. They don't give you, a leeway to turn things around and things like that. They don't care. If you don't deliver, they literally just take the entire thing. They're not taking the one project that's not working. They take the business. And I realized that this is actually their model of operandi. That's their business. So they go out there and buy like properties and things like that, or businesses that are showing signs of distress, and they come in, they throw in some money, and when things start working and you underperform according to them, they will take that business away. So obviously they win. It's their model of business, but it's not mine. So we're not compatible, and I walked away. So compatibility is one of those key issues. So Before I go on to point number 4, 5, and I promise you, I'm going to give you a bonus. So, which means that I'm going to, by the time I finish, I'm going to give you around about 6 of them, right? But I've already given you 2 bonuses as well as we go along. But let me just answer some of the questions that have come through. Right. Any advice for a 15-year-old? Oh, for sure, man. Welcome to the club. This thing has got nothing to do with age. It's got everything to do with what's up here and what you are putting up here. And if you are here because you're listening already, so that means that you're hungry. So well done to you. And what you might need to do is to get some form of a guardian who can maybe open up a company for you, and you can start learning everything that we're doing, and you can start implementing. Who knows, by the time you get 18, you might already have 3 properties. So you buy 1 property from now to then. You don't need money. You just need to have the right information and get the right deal. Someone asked the question, I asked this afternoon about being an investor. How do you go about it? Well, you want to be an investor, simply put, right? If you want to be an investor and you've got some money, and for instance, if I generally have projects, yes, you can literally join us. I'll put in the link here, and the link, you can literally go in and put in your details, and out of that, we will give you a call as an investor. So investors, we take an investor nothing more than 100,000, and you get a return of around about 14%. Okay, how much are the investors' returns calculated? What is the percentage? Well, I just spoke about that now, which is 14. We give out 14%. That's what you get per annum, right? So for every 100,000, it is 140 that you get, and that gets distributed on a monthly basis with the rental properties that we've got. Someone also asked the other question. This looks like the same person, maybe. Yeah, same question, same person. Bila, I think it is. What do you mean about compatibility with an investor? What should we look at choosing compatibility investors? Oh, okay. So when I talk about compatibility, right? Thanks, Bila, for that question there. I think they are watching me from YouTube. Yep. Okay. So compatibility, it's very simple, right? What kind of a relationship are you going in with your investor, right? Is it an armchair investment? Then compatibility doesn't really matter there, right? Because they are armchair, right? And then the second thing is that if you're really jumping into a relationship where you are building something together as a form of a partnership. So for instance, like me and Rita, we are business partners, right? And in this business, we work together. So let me just give you an example. I work, let's say, 16 hours. Every day, I work 16 hours, Monday to Saturday, and Sunday, I am gone, right? So I'm working 16 hours. But on the other side, we then say, myself and Rita, we say we are 50-50 in this business. But Rita's lifestyle could be that her husband has plenty of money, right? And she is doing this because she enjoys doing it, not to say that she wants to do it. She enjoys doing it. But she has plenty of money that she actually doesn't need to work. It's an example that I'm giving here. And out of that, she comes into the office at 10 o'clock and she leaves around about at 2 o'clock, because at 2 o'clock, she needs to go spend time with the kids and she wants to be at home when the husband comes through at 3 o'clock, right? So what's going to happen there? I am going to want to work with her as my business partner to get some things done. I am in the office at 5 o'clock and I'm finishing off at 10 o'clock. At some point, I am going to think that I am overworking in this business and she's also reaping the benefits, but she's only coming to work for 3 hours or 4 hours. So the compatibility is not there. And at some point at 12 midnight, I'm working on a business plan or on a deal. I want to give a call and she's not available. So for that reason, compatibility is not even there at all. We are 2 different people, right? So the other one is that you could have an investor who is an extreme case, and they want everything done by the book, and yet the businesses that you're jumping into, properties that you're jumping into, it fluctuates in terms of what is happening. So for that reason, you're not compatible because you can't be flexible with that person. They want things done in a particular way all the time, every time. And yet maybe the market or the business that you have ventured into doesn't allow for that. So there is no compatibility. You see? Okay, good stuff. Now, let me jump on to number 4. I'm going to come back to some more questions. I see there was some more questions that have come in here. But let me jump on to mistake number 4. So my mistake number 4 is that even though I had other funders, right? I had other funders on the way, right? So remember I said to you the first time around, I didn't even have plenty of funders or investors. I had one. So now my next mistake is now I've got funders who are available. They know about me. They know TJ closes deals. They know that TJ has good deals. But I had no relationship. Or should I say I didn't go out there to seek to have a relationship with people, with these private funders. So that we met, whether it was at a networking session or whether it was online, we exchanged business cards and they said, TJ, hey, I've got 2 million. Hey, I've got 100,000. Hey, I've got 500,000. Hey, I've got 50,000. And oops, off they went. The day I had a good deal on the table, I started calling John. I'm like, hi, John, how's it going? It's TJ here. Here, say you got 2 million. And he's like, who? TJ from M5? Sorry, I don't know you, right? So this is like 2, 4 months, or even a year has gone by, and I have lost or I haven't created a relationship with John, who had told me earlier on that he's got 2 million to spend. So basically, what am I saying here? The learning that I had from that mistake is that when someone else comes into my pipeline or to start talking to me about some investment, it is my responsibility and my duty to create the relationship with that person, right? Because by the time the right deal comes through, they know me already. And that was one of my biggest mistakes that I made, because out of all of this that I was doing great. I was finding good deals, but I was not nurturing the relationship with my funders. So by the time I actually wanted to get some money now from them to actually, put the pen on paper and to jot it down and sign, even though that had indicated that they've got some money, there was no relationship. And because there was no relationship, I actually had to start afresh. And by then, I was losing a deal on the other side. Because remember, deals always come with time. Yeah? I hope that does make some sense. I'm going to jump to point number 5 as we are getting close to finishing off. But someone else have asked, how do I access the course on the 6th? And that's someone else that's asking there. So you're going to get access onto the courses, right, beforehand, a week beforehand. So there's a virtual online course that you need to be doing at this time. And then on the 6th of March, we will be on Zoom. You're going to get the credentials. So we will start at 9 o'clock in the morning, around about 8:30, I think, all the way to around about 5 o'clock. And we will be in the class together, learning together in that class. So make sure that, if you have already bought for your class, make sure that you've gone through the pre-course content. That's number 1. And then number 2, you also have access to a stable internet connection on the day, and you're in a private space, you've got an office. If you need to go somewhere to find a good stable internet, you do that. And then for the rest of the day, we will be together. Obviously, we'll take some lunch, we'll take some tea, some easy break, some body breaks to just go out, exercise, so that we come back and sit down and we're fresh and we keep those the day fresh together. My mistake number 5. My mistake number 5 is that I didn't have a good flow of deals, right? So even though I now had funders who were waiting to giving me money, I didn't have a good flow of deals. Right. So I started doing a stop start, kind of like I had a good deal and I work on that deal and it finishes off and then I go back again. And yet on the sideline, there was plenty of people that were raising their flag, TJ, I've got money, TJ, I've got money. And I wasn't servicing them on their time of need. All right. So even though that queue was there, I wasn't ready. My deals were not ready. And for that reason, people lost faith in me and say, well, this guy, he says he's got deals, but I am ready, but he's got nothing. Right. My bonus one that I'm going to give you, boom, boom, drum roll. Yeah, drum roll. Okay, it wasn't a big mistake, but it can become a costly exercise. I'm gonna give you a hint. If you know me very well, you probably, or you've been on this channel, you probably have seen that I've got a team of attorneys that I work with. And the question is, why? I've got Garrett Shepperson. Garrett Shepperson, he is one of the senior specialists I know in real estate, in property law, right? He's been around for a season. He knows it all. His accolades are good, right? So he is on my team. He's one of my team members that I consult from a legal perspective. I've got Bruno Simao. Some of you have seen some of the videos that I've done with Bruno Simao. Why do I hang out with Bruno Simao? Bruno Simao is good. He's strong. He specializes in property law, right? He handles some of my cases. I've got Elise Leroux. Why do I have Elise Leroux? For the same reasons, right? And Elise, she's actually one of my business partners. So I've got plenty of money that comes through to me. And what do I do with that money? It goes and sits with Elise Leroux because she's got the capacity to manage monies in a trust. Okay, that's number one. Number two, I've got plenty of contracts that needs to be done on an everyday basis. So who manages that operational bit? Elise Leroux. I've got strategic things that I need to do and different contracts that needs to be done for different things. Garrett, Bruno, these are the people that look out of that. Because at least sometimes she could be looking into this because she understands the dynamics of the team and understands the business itself. So she might miss someone, she might miss something. And that's why I've got these two external boys that looks at, what's happening in the market, what can we do? Now, why do I have these guys? Simply put, if you're playing with private money, if you're playing with investors, if you're hanging out with funders, there's plenty of contracts that you need to sign. There's plenty of contracts that you need to understand before you even sign them. There's plenty of contracts that you need to amend to suit the situation of the deal, to suit the situation of the individual, to suit, different circumstances. And out of all of this, if you don't know the legality of the money that you're getting, you can get in trouble. You can. You can get in trouble with just the law itself, right? You can get in trouble. If you don't understand the legalities of managing these private funders, tomorrow when the deal is not working, now there's arguments. No, but I gave you 500,000 because on the basis that you and me were going to JV. It wasn't a JV. I was going to give you 12%. No, now you're getting into an argument. Whereas if everything is documented and it's clear, how do you bring the money? How does the money work? And how do you exit that money? Simple. Those three things. Okay? They might come in with so many complexities involved because there's different types of money that's coming in, or maybe the deal itself is a little bit complicated. Now you bring in the gurus. But when you're talking to the gurus, those three things are key. Because if you don't have those three things, how are you bringing in the money then? That's the question. How's the money going to work? That's another question. And how are you going to pay them back? Simply put, right? But you need someone with a legal head who's been trained, right? Who knows how to deal with these circumstances and the documents that they are after. Does that make sense? I'm hoping that this has made sense. I am glad that you have spent some time with me tonight. And like I did say, I am going to sell you the course. I do want you to be in the course, right? The course is not, because of COVID, I've put the course, it's generally on a 6,000 Rand without even the interaction of me. And it's online, generally online. But we have said, well, let's do it for 2,000 Rand. So you get the online course as a pre material. And then in the class for the full day, you and I, we get to spend the day together. So one person said, Kalian said he has already, or they have already signed up for the course. Well done. So we'll be seeing you in the class on the 6th. It will be via Zoom, like I did mention. I got one question that came through here. Do you put investors' money in a trust, or investing is required when there's already signed a deal about the start? Please enlighten. Pilar, it differs. It differs with scenario, but I would like to dive in a little bit deeper on that question when you come in for the class, and I can help you there in the class to say how best can we help you with the different scenarios, because that question there is such an umbrella question that you can fit in many things on how you can manage that. But what do you get if you have to come through to the class? So you're going to get the pre-course, which is an online course that we've put together. You will get that. You can also get my book that's called From Bad Debt to Property Mogul. You get it as part of the course, right? And then number 3, you also get me and my team for the whole day on that day. And you still get 100% all the access, right? All the access of the training material online, and you can be able still to continue learning even though we have closed the class. So everything will still be online, and you can take refresher courses on your own in the comfort of your house. But it is TJ Taurai Jack. It's been great hanging out with you within this last 45 minutes. And I'm hoping that I'll be seeing you in the class. And if you're not going to do this for yourself, I always say it, do it for your family, you know? I come from a family with no money at all, but I am living. By the time Jesus calls me, I want to make sure that I am going to leave a rich family behind. And those that love me will remember me for the works that I have done. And over and above that, the reason why I am doing this, my why of why I am doing this, is I want to change the narrative of me. Where I come from is not where and who I should be, and it should not define where I'm going. If you can do it with private money, then you are in to win. Because private money doesn't dictate, you can negotiate whatever you want, payment terms, the conditions of how this money can become to you. So it's really up to you to make it win. But I'm here to make sure that you can win also. I have only put 1,000 Rand of my own money in all the properties that I've bought. Yep. But actually, I got that 1,000 Rand back again. And all of it has been made successful with private money that I've raised throughout my career within this business. So I am positive that if I can do it, you too can do it. We'll check you out in the class on Saturday, the 6th of March, and make sure that you have done your pre-course work. And out of that, we can make that day a successful and fully engaged, so that we can get as much value. We'll check you out on the next videos.